Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea and the worst idea was basically all of us worked all weekend across the 3-day weekend. We tried to do things here, as we all do, but we were all glued to our phones, doing the social media, reading the zeitgeist, if you would. Major shout out, William Rhodes, iconic at Citigroup of Brown University, his Brown University. Bill Rhodes writing up a wonderful essay in Project Syndicate on the moment at hand for Europe. He is of 91 years old. We celebrate that Bill Rhodes published this weekend. Marc Champion published as well. Really can't say enough about his work. Definitive in Europe with a truly wonderful transatlantic perspective. Iconic at the Wall Street Journal and now writing for Bloomberg Opinion. Marc Champion on the moment at hand.
This is going to be incredibly hard for Europe. They all understand they need to hang together. The problem is finding that common denominator that allows them to hang together. And so long as, this is what Merz has been hinting that he's going to be saying to Macron, is that you need to ease off a little bit because you just can't take us all with you. Now, if there is a method to what Trump is doing here, one way that you could explain this is to say what he wants, and it's what he said he wants, is to divide the EU, in particular on trade. He really cares about trade.
Marc Champion there, and of course we'll continue to speak to Mr. Champion and others across all of Bloomberg Opinion. Again, the president speaks tomorrow at the meetings of the World Economic Forum. A good way to start here with markets in turmoil. Michael Purves joined us here on the move in equities, the move in gold up to 4,700 plus as well. The bond market move, prices lower here. Michael Purves on a unique Tuesday.
I think what's really idiosyncratic with Japan right now is the fact that their 30-year bond is that yield is surging, right? And it's an interesting contrast because in the United States, for all the time we talk about the Fed, the chair, and inflation, and all this interest rate stuff, the reality is that rate volatility in the U.S. has been extraordinarily low, perhaps until last night. And rate volatility overseas is doing, in Japan particularly, is doing very interesting things.
Michael Purves there on how to interpret all that we see in the market. So here's a little bit of nerd fest on a Tuesday. It's so cold now. All you can do is go to logarithms. So we all quote yield, and you heard Mr. Purves say there, yield surged in Japan. So it's yield up, and that means inverse price down. So on the Bloomberg, and this is rarely quoted in the zeitgeist, are the price of a bond, a note, a bill. And in the case of the 10-year or 20 or 40-year Japan, we can get a price. Farther out you go, the bigger the price move for drama. So I bring up the 40-year Japan bond, 40-year in price, not yield, in price. And basically it's gone 90 to 80, just as a general idea. So then I look at the movement, the volatility, as Mr. Purves was just talking about, which is a standard deviation. Right now, that 40-year piece is at 83. If it goes to 82 or 81.5, something like that, it's a 4 standard deviation move. That is really, really critical to the kind of math that leads to emotion and the unexpected in Japan. Again, the TE function, the trading envelope function, modeled out logarithmically, is a 4 standard deviation move. We're really getting there quickly on some of the Japanese debt. On podcasts, out at Spotify, at Apple Music as well, and YouTube podcasts. Single best idea.